Hi guys, this is Chauke. I'm a professional teacher of accounting. In this morning's lesson, we're going to be looking at the income statement from the November 2020 paper 1 grade 10. So I really hope that this will help you in preparation for your project that you are going to write on the 26th of August. Okay, so now here is saying that the following information provided is extracted from the records of VLE collections. Their financial period ends on 31 December 2019. Now, like I always tell you, financial period is very important. You must make sure that you are aware of the financial period. If our year starts on 1 January, it will end on 31 December 2019, and this is the easiest financial period that you guys can get. Here is saying that the business uses a profit markup of 60% on cost, meaning that on top of, for them to be able to determine their selling price, they add 60% of the cost price to the cost price to determine the selling price. Okay, here is saying that complete the following financial statements for the year ended 31 December 2019, and this is for 42 marks. Normally your income statement, you are supposed to do it in about 35 minutes, 30 minutes. So you need to make sure that you practice your speed. Now, in order for you to do that, you need to make sure that you know the structure or the format of an income statement, because sometimes it will not be given to you. You need to know what do you expect under that particular income statement. So when it's like this, I normally advise learners to say they must make sure that the format is complete. Remember, when it's like this, some expenses you won't have, so it is always wise to make sure that you write down the basic format, and then from there you go to your trial balance. You start entering your accounts from how they are given. So if you look at this, our expenses and incomes are in the nominal section. On the credit side, we have our incomes, and on the debit side, we have our expenses. But remember, our expenses are divided into different categories. We have expenses and incomes that we are going to use to determine what we call the gross profit, or the trading section of an income statement. So if you look at your sales, cost of sales, and debtors allowance, you are going to use them to determine your gross profit. And operating expenses like water and electricity and others, you are going to use them as part of your operating expenses. Things like your rent income, your commission income, you are going to use them as part of your operating incomes. Remember, operating incomes, we are talking about incomes that are not the main activity of the business, but we are earning them. And you must also remember that interest expenses and interest income have got their own accounts, so you cannot include them under those sections that I've mentioned. So now we are going to start by entering the information that is given to us according to the format. Okay, now we must really make sure that we are able to manage our time very well, because most learners, they struggle with time. So when it's like this, I always advise learners to say carry a highlighter. Make sure that you have a highlighter and a pencil or a red pen, so that you can be able to underline the most important things, and also tick items once you've used them, so that you can see what has not been utilized. So we're going to start. Our sales according to here is 400,380. So we're going to enter it here in brackets. Remember, what we enter in brackets, it means that we are saying that these are the items that we might need to adjust should there be a need. So that 400,380, I'm going to put it here. Okay, so remember, we're going to have 400,380. Maybe let me use a black pen so that this can be visible. And then we are automatically going to subtract our debtors allowance, that is from the trial balance. That is what the format says we must do. So we are going to subtract 1,980. Automatically you earn a mark for this one. I'm going to say subtract 1,980. So remember, it's 400,380 minus 1,980. Our cost of sales is 240,000. So I'm going to put it in bracket here, 240,000, and then from there I go to other accounts that I have. Next, we have water and electricity for 4,950. We must make sure that this water and electricity is recorded if it's not written for us. So we're going to write it here, water and electricity, and then I'm going to write that answer in brackets. So remember, water and electricity for us is 4,950. Okay, And then next we have the next expense that we have is advertising. We need to check if advertising has been recorded. So advertising is 5.9. Is it there? Has it been recorded? No. So I'm going to record it here. Advertising 5,900. And then from there we're going to check other things. We have insurance for 3,890. I'm going to enter it. Is it written? No. So I'm going to put insurance. It's 3,000 3,890. So I'm going to put it here, 3,890. And then next we have our rent income for 20,800. So I'm going to put it under other operating income here. So I'm going to have rent income, and then the amount is 20,800. So that 20,800 will come here. And then next we're going to check what else we have. So remember the ones that I've used, I highlight. We have vehicle repairs for 3,300. So we're going to put it here under operating expenses because it's not listed here. So we're going to have vehicles repairs, and the amount is vehicle repairs 3.3. okay, so it's 3,300. And then from there we move to the next one. We have a commission income for 19,000. So I'm going to put it under operating expenses as our commission income. The amount is 19,000. So that 19,000, I'll put it in brackets here. Okay. And then next we have stationery for 4,520. So let's check if that stationery was recorded. So it was not recorded. I'll put it here. Stationery 4,520. okay. And then I'm going to highlight it. Next one, we're going to have a packing material 2,110. Is packing material recorded? No, it was not recorded. So we'll record it. Packing material 2,110. Then we're going to check what else are we given. We also have interest on fixed deposit for 2,000. We don't have any interest on loan, so interest on fixed deposit is going to be part of our interest income. Remember here it's interest income, and then the amount is 2,000. So that 2,000 we will put it here. And then here, remember, we're going to have finance cost or interest expense. So our finance cost at the moment is not known. We might get a loan statement. Then once you are done with this, guys, then you need to go to your adjustments. So you've already entered everything. You are almost you can get at least around 30% for around 30% of the total mark. So you need to make sure that you enter these things correctly, guys. Okay. Now let's check what else are they saying to us. The first transaction says that the owner withdrew stock to the value of 1,072 at the selling price before the fiscal stock count was completed, and the keyword is that this transaction has not been recorded. So the owner withdrew stock for personal use. So we know that once the owner withdraws stock, then we have drawings. So now what you need to do is that you need to check, you need to make sure that this transaction is recorded. I remember we're going to conduct a trading stock deficit or surplus, but in this case personally I think we'll have a deficit because on our operating incomes we don't have space, so I think it will fall under this. But we need to check. Now remember, guys, that the trading stock, when it's taken for personal use, it is taken at a cost price, not selling price. So we need to use the markup. Remember, they said the markup is 60% on cost. So for us to determine that cost price, we're going to say 1,072 multiply by 100 divide by 160. So it will give us 670. So meaning that the cost price of the stock is 670. And remember guys, there's no way your cost price will be more than your selling price. So we need to make sure that when we record this transaction, we check. Now we want to check, are we going to have trading stock deficit or surplus? The trading stock from the books is 6,508. So I'm going to have that 6,580 here. Now if I minus 670, it is not going to give me the same stock as the one that is on hand. So let's check. 6,580 minus 670, it gives me 5,910. So the records are saying that my stock on hand should be 5,910. So let's check if we are really getting the same thing. Now when you check here, your trading stock is actually 4,300. So you can tell that there is a deficit. So it means that we're going to have trading stock deficit. Okay, so I'm going to put it here. We're going to have trading stock deficit, and then remember, when you do the calculation, you must use the double bracket like I showed you. Firstly, update the stock from the books, and then from there check the difference. So we're going to say 6,580. Remember, when I take stock for personal use, my stock is reduced. So we're going to say 6,580 minus 670, and then from there we say subtract that fiscal stock that is on hand. According to here, the fiscal stock on hand is 4,300. So we'd say minus that 4,300 so that we can see what is the shortage. Okay, and then when we do it, I'm going to show you when we do it using double bracket, you will see 6,580 minus 670. Then I close the bracket, and then minus 4,300, and then I close the bracket. My answer is 1,610. So our trading stock deficit should be 1,610. Let's check here. If we say 5,000 on the calculator, if we say 5,910, and then we say subtract 4.3, how much do we get? 1,610. Now we also have stationery on hand for 950. Remember, I told you guys that anything that is on hand must be subtracted. So our stationery is on hand is 950. So I'm going to subtract that 950 minus 950. And then also we have packing material on hand for 340. So I'm also going to say here under packing material, I'm also going to say minus 340. And then from there we check, we go to the next transaction. Remember guys that when you do this, they are going to give you different transactions. Some will be accrued, some prepaid, and in terms of expenses, you are supposed to have an accrued expense, you are supposed to have a prepaid expense. In terms of incomes, you are supposed to have accrued income and income received in advance. So when you deal with that, you need to make sure you know exactly what to do. Okay, and then there will also be a transaction whereby an error was committed, and you will be required to correct that and show the effects of that. Now here is an amount of 11,800 paid for repairs to one of the vehicles was debited to the vehicle's account. Keyword, correct the error. Now here what they've done, here what they did is that they repaired one of the vehicles, but however they recorded it as if they were buying a vehicle. So it means you must go to your vehicle's account and you minus this 11,800 because it was debited to that. So under vehicles here, we are supposed to say 211,800, and then we subtract that 11,800, and then we go and take this and add it to our vehicles repairs, because it is, we have repairs for vehicles. So under vehicles repairs, we're going to say plus 11,800. Remember, I told you guys that when you correct an error, you firstly reverse what they did, and then after that you do the right thing. Very important for you to remember that. Now the next adjustment says that the water and electricity amount for December has been received. Keyword is that it has been received but not yet paid. Okay, so I don't know this thing doesn't want to highlight, so it's going to be a problem. So I'll just try to, let me see if maybe I can't underline, but this will require pen. So here they're saying the Gauteng electricity account for December 2019 has been received. So you got your statement, but you did not pay it. And then they're saying that the outstanding amount is 450. So in other words, our water and electricity is accrued. It has not been paid. It is behind. Remember, I said you will get a transaction like this always. So which means that we are going to go to our water and electricity, and we're going to say plus 450 because they said it is accrued. And then next, they're saying that the amount for insurance includes an amount of 800 paid in advance for the next financial year. In other words, we paid it for next year, so it means it is a prepaid expense. So once they say something like this, we know that we minus. So we're going to go to our insurance and say minus 800. So we'll minus that 800 under our insurance. Okay, then next they're saying that advertising includes an amount of 1,400 for a 4-month advertising contract. The contract starts from 1 November 2019 and runs until February. Here's what is very important, guys. We must check firstly how much they were paying per month. So if you say 1.4 divide by 4, it will tell you that they were paying 350. So it means that per month they were paying 350. Okay, now this advertising runs from it runs from November. Remember, it's November, December. So it was only supposed to cover 2 months. It was only supposed to cover 2 months. So it went outside by January and February. So it means it is this advertising was prepaid for 2 months. So what you are going to do, if you say 1,400 and then you say multiply by 2 divide by 4, it will tell you that it is 700. Remember, 350 times 2, it is 700. So this 700 must be subtracted from advertising. So I'm going to look for advertising and subtract that 700. I hope you guys understand. Now the next one here, they say provide for the outstanding interest on fixed deposit. The good thing about this income statement is that it's very easy for you to earn marks here. If you look at this, if you were really practicing and using the activities that you're given in your classes, it would be easy for you to get the things, okay, to get those marks that are required. So here they're saying provide for the outstanding interest on fixed deposit. So we need to check what is our interest on, what is our fixed deposit. Our fixed deposit according to this is 40,000. They didn't tell you anything about when this was invested, so we assume it started the year with us. So if 40,000 multiply by 10 divide by 100 and then multiply by 12 divide by 12, it should give us the interest that we were supposed to receive is 4,000, but we are going to check our interest on fixed deposit here is 2,000. So it means that our interest income was accrued by 2,000. So here we're going to say plus 2,000, then so that our total can become 4,000 here. Okay, then we can go to the next transaction. The next transaction says that received the loan statement from Royal Bank. When you get a statement like this, for me personally, when I was in high school, I used to rejoice because I know that I would use a bottom-up approach, which is the easiest. Now here they're saying we received the loan statement, the opening balance was 130,000, the interest is unknown, and then the repayment is 40,000. So when it's like this, and your closing balance is 105,000, when it's like this, remember guys, if I take 130,000 and I subtract 40,000, I'm supposed to get 105,000, but I won't get it. I'll show you. If we say 130,000 and then we say minus 40,000, we won't get, we get 90,000, but here it says the closing balance is 105,000. So which means if we say 105,000 minus 90,000, it will give us that interest, which is 15,000. But I'm going to do it using bottom up approach, remember, is this plus this minus your closing balance plus repayments minus your opening balance. So it's going to be 105,000 plus that 40,000, and then we subtract 130,000. Okay, now you must also check if you don't have any interest related, any finance related cost beside the one from the loan statement on trial balance. If it's there, you edit. Okay, so let's check 105,000 plus 40,000, and then we subtract 130,000. It is giving us 15,000. So our interest expense is 15,000. So I'm going to say 15,000 here and put it in brackets. Then I'll have my 2 marks for that. Then the next transaction says depreciation is calculated as follows. On 31 December, equipment is 10% on cost and vehicles 15% on diminishing balance method. So for vehicles, remember now my vehicles, the cost price is 200,000. Now is no longer remember the answer here. After you subtract this, you will get 200,000. So my cost price will now be 200,000, not 211,000. So when you do that depreciation calculation, because they said for equipment they are using diminishing balance, for equipment is 10% on the cost, and then for vehicles equipment is 10% on the cost and vehicles is 15% diminishing balance method. So we are going to start with the easiest one, which is equipment. Remember, they didn't buy anything, so it will be easy for us to do it. Okay, so now let's check what is happening here. So if you look at this, you'll realize that remember they said for equipment they're using cost price method. So we're going to look at our equipment here and check what is the cost price of our equipment. Remember, our equipment, the cost price is 100,000. So if you take 100,000 and then you multiply it by 10%, 10 divided by 100, and then you multiply it by 12 divided by 12, it is going to give you 10,000. So under depreciation here for equipment, we're going to have that 10,000. So I'm going to say 10,000 here, and then I'll also plus here. Now next we have to, for diminishing balance method, they say it's 15%. So what we are going to do, we are going to go back to our, remember our carrying value is our cost price is now 200,000. So if we say 200,000 minus 40,000, we'll get our carrying value. So we are left with 160,000. Now if we take 160,000 and say multiply by we multiply it by 15 divided by 100, it's going to give us 24,000. So which means that our depreciation for the vehicles, because they are using diminishing balance method, is going to be 24,000. Okay, remember the calculation. 160,000 multiplied by, let me just verify if my calculation will be correct. Remember, 200,000 subtract 40,000, you'll be left with 160. So 160,000 multiplied by 15%, 15 divided by 100 is going to give us 24,000. So our calculation is right. So we're going to say here when we edit, we're going to say 10,000 plus 24,000, and then we know it's going to give us 34,000. So which means that our total depreciation will be 34,000, and then from here we can close this off because we are done doing the workings for this. Okay, next we go to the next transaction. Here they're saying that rent has been received for 13 months, keyword. So if it's 13 months, it's simple. I take my rent income and divide it by 13. Remember, I was supposed to receive it for 12 months. The good thing about this one is that the rent did not have any increase or decrease, so you don't have to worry. So if you say 12 20,800 divide by 13, it is going to give you 1.6. So which means I must subtract 1,600 under rent income. So I'm going to do it here. So I'll say subtract 1.6. Okay, and then I'm going to close my bracket. Then the last transaction says that an amount of 1,000 is still outstanding for commission income on 31 December. So it means that this keyword outstanding, it means it is owed to me. So my commission income, I'm going to say plus 1,000. Then from there you can just deal with closing off your things. Remember here our total will be here will be 20,000. So we're going to have that 20,000 here. Okay, and then next, if we say 20,800, then we say minus 1.6, it is going to give us 19,200. So our answer here will be 19,200, and then 19,200 plus 20,000. 19,200 plus 20,000, it is going to give us 39,200. So our other operating income will be 39,200. Okay, then we are done with this part. So let's go and work out our things here. So obviously there was no return, so our cost of sales and sales will remain the way we have made it to be. So here we'll have 240,000, remember, and then our net sales will be 400,380 minus 1,980. It is giving us 398,400. So we're going to have 398,400 here, and then the difference between the two will give us the cost of sale, gross profit. So 398,400 subtract 240,000, it is giving us 158,400. So we have 158,400 here, and then our gross operating income will be 158,400 plus 39,200, and it is giving us 197,600. So I'm going to put it here as part of my gross of 197,600. I'm going to put it there as my gross operating income, 197,600. Okay, let's just confirm 158,400 plus 39,300. Yeah, that's right. Okay, then from there, what we need to do when it comes to our expenses, we are going to close them off. We can't leave them like this, remember. So I'm going to close off this bracket so that our work can become neat and show that this was done by professionals. Okay. Now here we are going to do this. So I'm going to close off my water and electricity. So remember, 4,950 plus 450, it is going to give us 5,400. So I'll put that 5,400 here, and then next 5.9 minus 700, it is giving me 5,200. So that 5,200 will come here. Now next, we're going to check which account do we have to close off. That's insurance. So if we say 3,890 minus 800, we're going to be left with 3,090. So I'm going to put it here. And then next, if we say 3.3, 3,300 plus 11,800, it is going to give us 15,100. So I'm going to put it here. Then next, 4,520 minus 950, it is giving us 3,570. And then the last one, 2,110 minus 340, it is going to give us 1770. So that 1770 will come here. Now all we have to do now is to make sure that we get the total of all our operating expenses. And remember, operating expenses must be bracketed. The mistake that most learners do, they forget to add the bolded ones or the ones that we written for them. So you must also add this. Okay, so I'm going to do it here and show you. So remember, we're going to say here, we're going to say 65,000 plus 4,050 plus 4,000, and then plus 5.4 plus 5.2, and then plus 3,090, and then plus 15,100, and then plus 3,570, and then plus 1,770, and then plus 1,610, and then plus 34,000, and see how much we will get. So we are getting 142,790. I'm going to put it here in bracket, 142,790. Okay, then I want to confirm it, because sometimes, you know, when you add a lot of things, you can make a mistake. So I'm going to edit again. 65,000 plus 4,050 plus 4,000 plus 5.4, and then plus 5.2 plus 3,090 plus 15,100 plus 3,570 plus 1,770 plus 1,610, and then plus 34,000. It is still giving us 142,790. So therefore it means this is the right figure. So if we say 197,600 minus 142,790, it is going to give us our operating profit. Okay, remember, 197,600 minus 142,790 is going to give us our operating profit of 54,810. So I'm going to write it here, 54,810. Then if I take that 54,810 and I say plus 4,000, it's going to give me 58,810. Okay, now when I take my 58,810 and then I subtract 15,000, it's going to give me the net profit for the year, which is 43,810. Guys, I really hope that this lesson was very fruitful for you. If you want me to become your personal tutor to help you with accounting, you're more than welcome to make sure that you get in touch with me, and I promise you that I will make your accounting problems a thing of the past. And also, don't forget to like this video, leave your comments down there, tell me how you felt about the lesson. If there's any area of improvement, you're more than welcome to use my contact details to get in touch with me. Or also, if maybe you know of any possible sponsor that you may know about, anyone who wants to donate books, you know, like preparing for these lessons take a lot, you need to look for material and so forth, you're more than welcome to get that person to use the contact details that I've provided in the description of this video. Thank you so much for watching, guys. May God richly bless you. Have a blessed day. Shalom.